XRP price to $27? Bullish analysts see growth as ex-Ripple CTO boasts use cases. Let me ask you something straight up. If someone who literally helped build XRP from scratch, someone who wrote the code, who sat in the room when none of this existed yet, if that person came out this week and said the use cases for XRP are growing faster than ever before, would that mean anything to you? Because that is exactly what just happened. And at the same time, a technical analyst is making a serious, structured case that XRP could reach $27 in the coming years. Now, I'm not here to hype you up and send you running to buy anything. What I am going to do is lay out exactly what was said, who said it, and why it actually matters, right here on XRP Future Finance. David Schwartz spent years as the Chief Technology Officer at Ripple. He is one of the original architects of the XRP Ledger. This is not a social media influencer with a price chart and a dream. This is the engineer who helped design the system we are all talking about. And this week, ahead of Ripple's upcoming Swell conference, Schwartz went on X and said something that caught a lot of people's attention. He said that the best part of these annual events is always getting to see the new ways people are using XRP and building on the ledger. He said he expects this year's Swell to be the biggest one yet, and then he named the specific areas he is most looking forward to discussing: payments, tokenization, interoperability, decentralized finance, artificial intelligence, and whatever comes after that. That's not a vague statement. That's a man telling you exactly where the growth is happening. Here's why that list matters. A few years ago, the conversation around XRP was almost entirely about cross-border payments. Send money faster, send it cheaper, settle it in seconds. That was the pitch, and it was a compelling one. But what Schwartz is describing now is something considerably larger. Tokenization means putting real-world assets, things like real estate, bonds, commodities, onto a blockchain so they can be traded and settled digitally. Interoperability means connecting different blockchain networks and financial systems so they can actually talk to each other. DeFi on the XRP Ledger means decentralized financial products built natively on this infrastructure. And the mention of artificial intelligence tells you that developers are already starting to explore how XRP fits into the next wave of technology. This is an ecosystem that has grown well beyond its original lane, and Schwartz is watching it happen in real time. This is also landing at a moment when Ripple's business results are starting to back up the narrative with real numbers. Brad Garlinghouse, Ripple's CEO, recently said the company is targeting a $1 billion annualized revenue run rate by the end of 2026. Now, Ripple is privately held, so we don't get quarterly earnings to verify that figure. But this is not a startup promising moonshot revenue in a pitch deck. Ripple has been operating for over a decade. It has institutional clients across dozens of countries, and it just settled a multi-year legal battle with the SEC. When the CEO puts a number like $1 billion on the table at this stage, it carries a different kind of weight than it would have 5 years ago. It suggests the underlying business, the payments rails, the stablecoin work, the custody infrastructure, is actually generating serious revenue at scale. Now let's be honest about something, because this channel doesn't do one-sided storytelling. There is a tension inside the XRP community that has existed for a long time, and it didn't go away this week. The tension is this: Ripple the company and XRP the token are not the same thing, and their interests don't always move in the same direction at the same speed. Supporters will tell you that as Ripple's business grows, the demand for XRP as the native utility token of its network has to grow along with it. And there's logic to that. More transaction volume, more tokenization activity, more DeFi usage, all of that should theoretically increase the demand for the token that powers it. But skeptics will point out that Ripple has historically had mechanisms to sell XRP into the market, and that retail holders have not always shared equally in the upside from the company's business success. That is a fair concern, and it is worth keeping in your head even when the sentiment is running positive. Now let's talk about chart nerds. On June 8th, this crypto analyst posted a detailed technical breakdown on X that has been getting serious traction in the XRP community. The core argument is built around historical XRP market cycles, specifically how long the bear markets last and how deep the price drops go before recovery begins. According to the analyst's research, XRP bear markets have historically run between 400 and 790 days, with price drawdowns ranging from 85 to 96% off the prior peak. Those are significant numbers. If you've held through any XRP correction, you already know how brutal those periods feel. But the part of the analysis that makes this post stand out is what chart nerds noticed about the trend across successive cycles. The duration and severity of these downturns appear to be getting smaller over time. Not gone, not mild, but measurably less extreme than the cycles that came before. Running the current cycle against that historical data, chart nerds flag something worth paying attention to. As of early June, XRP had been in its bear market correction for roughly 350 days, and the decline from the July 2025 all-time high was approximately 71%. Compare that to the historical range, 400 to 790 days, 85 to 96% drawdowns, and the current cycle is actually tracking lighter on both counts. The analyst's conclusion is not that a recovery is imminent, it's more measured than that. The conclusion is that the window for marking a cycle bottom is opening up, and that somewhere between now and the end of 2026, the conditions for that bottom are likely to be in place. That's a very different statement from saying XRP is about to explode higher next month. What ChartNerds is describing after the bottom is an accumulation phase, a period where price moves sideways or builds quietly before a larger repricing takes hold. This is a well-documented pattern in crypto market cycles. It's the period that most retail investors find the hardest to sit through because nothing dramatic is happening on the surface. But it's also the period where position sizing and conviction matter most. Once that accumulation phase plays out, the analyst points to Fibonacci extension targets as the likely destination for the next major price move. $8 as the first target, $13 as the mid-range target, and $27 as the upper Fibonacci extension. These aren't numbers pulled from optimism. They're calculated levels based on prior price structure and the mathematical relationships between them that technical traders have used for decades. Let's be clear about what Fibonacci analysis is and what it isn't. It is a widely used technical framework. Professional traders, hedge funds, and market analysts use it constantly. It is not a guarantee of anything. It does not factor in regulatory changes, macroeconomic shocks, exchange failures, or any of the other real-world events that have derailed crypto price cycles before. The $27 target assumes that XRP follows its historical cycle pattern, that broader market conditions are supportive, and that adoption on the XRP ledger continues to expand. All of those things are possible. None of them are certain. You need to hold both of those truths at the same time if you want to think about this clearly. Now here's the part of the story that genuinely surprised a lot of people when it first came out, and it goes back to David Schwartz again. Because while analysts are throwing out targets of $27, $50, even $100, Schwartz himself has publicly said he is not comfortable making those kinds of predictions. Back in January, when speculation about XRP hitting $50 to $100 was running hot on social media, Schwartz responded directly and said he wouldn't co-sign those forecasts. Not because he thinks XRP is going to fail, but because he's been in this space long enough to know that his own price intuitions have been badly wrong before. He revealed something personal in that post, that he started selling his own XRP back when it was trading at 10 cents, because at the time it seemed unreasonably high. He also remembered when Bitcoin reaching $100 felt like a fantasy. That kind of honesty from someone in his position is actually rare and worth taking seriously. He wasn't talking down the asset, he wasn't spreading fear. He was applying the humility of someone who has watched this market do things that made no sense in both directions, and acknowledging that the future is genuinely hard to predict with the kind of confidence that some voices in crypto project. His point wasn't that XRP can't reach those levels. It was that he personally couldn't sit here and tell you with conviction that it will. And he thought it was important to say that out loud, rather than ride the hype wave and tell people what they wanted to hear. But then Schwartz added a layer of market reasoning that is actually pretty sharp. He argued that current prices already reflect the collective belief of every buyer and seller in the market. If a meaningful number of informed investors genuinely believed there was even a 10% chance of XRP hitting $100 within a few years, they would not be selling it today at current prices. The math on expected value alone would prevent that. So the fact that XRP is trading where it is, below $10, tells you something real about where the broad market actually places the probability of those extreme targets. That's not pessimism, that's how markets work, and it's worth understanding before you let any single price prediction, bullish or otherwise, drive a major financial decision. What you're left with when you look at this full picture is something more nuanced and more honest than the usual XRP coverage tends to offer. On one side, you have genuine, tangible evidence of growth. The XRP ledger is processing more transactions. More use cases are being built on it. Ripple is generating real revenue. David Schwartz is enthusiastic about what developers and businesses are doing with this technology. Those are not small things. On the other side, you have a token price that is still well off its highs, an analyst community that disagrees sharply about how high it can realistically go, and a co-founder of the company itself urging caution about the more extreme forecasts. Both sides of this picture are real. Neither one cancels the other out. Where this leaves the average XRP watcher is in a position that requires something most people find genuinely difficult: patience without certainty. The $27 target from Chart Nerds is not a next quarter story. It's a multi-year cycle story built on technical patterns that may or may not repeat exactly as they have before. The accumulation phase, if it arrives, will feel slow and boring and frustrating before it feels exciting. The Swell Conference will showcase real-world use cases that matter for long-term adoption, but won't necessarily move the price the following morning. And David Schwartz will keep being honest about what he knows and what he doesn't, which, if you're paying attention, is actually more valuable than 100 confident price predictions from people who have no accountability for being wrong. What matters going forward is watching the fundamentals: transaction volume on the XRP Ledger, new institutional partnerships, Ripple's revenue trajectory, and whether that cycle bottom. Chart Nerds is pointing to actually forms and holds. Those are the things worth tracking. The noise on social media will always be louder than the signal. Your job as someone who cares about XRP is to separate the two. That's what we try to do every single day here on XRP Future Finance. Thanks for watching. Subscribe if you haven't already. Share this with someone who needs to hear a straight take on XRP right now, and we'll see you in the next one.